connect with Neeraj Deewan, who's joining in on the show. Hi there, Neeraj. Let's get in your take first up on the China policy stimulus and what this could spell out for some of the metals counters.
Yeah, good morning. Yeah, definitely the stimulus measures they've announced for easy liquidity and policy, I think that will impact the metal stocks. I think, but last time when it came, India was impacted more because of some outflows. I think that time was a little different as our results, it coincided with our results, which were not that good for the second quarter. So that also contributed to the outflow which happened because of the China stimulus. But specifically, metals did well, and I think they should do well. I'm more positive on the non-ferrous space. I think that is where, China stimulus may have impact there, but otherwise also, I think for a little medium to longer term, non-ferrous space looks very good. So though there will be impact because of China, as far as metal space is concerned, broader markets also, we have to watch whether this time the impact is as much as we saw earlier, because we saw some good outflows going out of India that time. So that needs to be watched. I think this may not be that much which it was last time.
Okay, so that's the take coming in as far as metals pack is concerned. But just shifting focus and talking about the other space which was in focus yesterday, Neeraj, and that was consumption. That clearly is faltering right now. What's the sense in FMCG? Is it a good time to buy when there is a dip, or just wait for the upswing and then perhaps dip into these names?
I think as far as the FMCG is concerned, we saw a good correction happening post the results also. So one can be little stock specific there. It's little premature to say whether what one company said yesterday will hold good for all the others also. Though there may be some difference in the product categories, and inflation, which going ahead may look a little benign. So that may also have some positive impact on the FMCG companies. So if you're stock specific there, you get, these are the opportunities to buy some of these large companies like Levers or Britannia when they correct like this. So one should not be in a hurry, but I think in the dip, one can accumulate slowly into some of the large FMCG names.
Okay, point taken. So that's the take coming in on FMCG. Just want.
Everybody is talking about quick commerce. That in a sense has become the most used, not the service, but I guess the most used experience. And quick commerce is where all the excitement is. I mean, the turnaround in Zomato is nothing short of spectacular in terms of what they have done. Swiggy, in a sense, is very confident that the quick commerce business will continue to grow. But on the other side, which is DMart, has suffered because of the growth in quick commerce. So Neeraj, 2024 was all about quick commerce. Do you think 2025 could be back to basics, which is back to big box retail companies?
Yeah, good morning. I think quick commerce is still there to grow from these levels also. I think it has grown, but I think that's the beginning and the growth may continue. So I think the quick commerce story should continue in 2025 also. Now with two players listed, I think you will get opportunities. Instead of one company, you can invest in either one of the companies. I think that is one where I think the growth is.
Okay. Neeraj, I can see that it's getting smoggy. I mean, it's fog or smog behind you?
Yeah, that is just a blind, I think, which is making it look like.
Oops. I thought maybe that's Delhi weather looking nice and bright and winter with warm morning sun. Nothing like that. Just a blind. Okay.
Yeah, it's clear right now.
Okay. But Neeraj, in terms of this entire move towards green and clean, how are you tilting your portfolio towards buying anything which benefits because of this?
I think there are a lot of companies which have a good portfolio of green energy and sustainable, and there are already established players like Tata Power, which have a huge portfolio. There are some government companies like GIPCL, which is coming with a huge solar power. Solar power park and capacity will go up. So I think these are the companies which, and you saw a good move in Wari postal listing also. So I am more focusing on stocks like Tata Power or GIPCL, which have a good portfolio of green energy, solar energy.
32% higher for Tata Power.
Okay, meantime, let's also get in a take, Neeraj, from you as to what the outlook is when it comes to some of these quick commerce plays yourself. How is it that you're looking at the overall landscape with the competition having heated up and lots of players entering the fray?
I think there is a lot, the market is too big, and more people are getting used to this quick commerce, ordering, 10-minute delivery. I think that growth will continue. So, initially for the next, maybe some more time, maybe a year or this couple of players which already established themselves, like Zomato and Swiggy, they will get the major chunk. The growth, the major growth will come in these companies. So I think one should play this quick commerce growth with either of these companies right now, and then look at some other upcoming other companies also.
Point taken. But since we are talking about quick commerce, let me, kind of toss it across to what Harsh Mariwala of Marico had to say on the matter. I got the opportunity to quiz him around that. Hear out his take.
Distribution is going through a transformation, especially in big cities and even in mini metros also, because of the emergence of quick commerce, which is a big discontinuity. So organizations have to realize that, okay, they have to encash on this opportunity or how to mitigate the threat arising from that. And the threat comes in to your normal distribution channel, which is undergoing a huge impact. So you may have to redo your distribution strategies. Many of the retailers may shut shops, but that's reality, because what Q-commerce is offering is really unique in terms of not only just delivery in minutes, but discounted prices, anytime delivery during the day and night, also returns. All that is not offered by the grocer, so they have a unique advantage compared to grocer. So I think one will have to look at that, FU and FMCG. But the most important thing for any brand is the product itself.
All right, that's the take coming in on Q-commerce, certainly on its way to beating e-commerce very soon. Meantime, let's also put the spotlight then, Neeraj, on some of these infrastructure counters. What's the outlook in terms of where you believe leadership is likely to emerge with the overall capex expected to improve?
I think I am positive on the infrastructure space. The couple of reasons. One is that normally the third and fourth quarter is much better than the first half for these companies. Second, I think government capex is expected to pick up, which everyone's hoping for. Would have picked up now, and will gain steam going ahead to the third and fourth end of the third quarter and the fourth quarter. I think that is one which should lead to good order inflows for these companies, and plus execution will also pick up, towards the end of the year. Whether it's large cap companies like L&T or even road companies, and even some of the companies which are into road, material supply, like like bitumen companies. These are the companies which should go well going ahead also, and even the pipe sector, which contributes a large to the infrastructure space, should also have good growth going ahead.
The space to watch out has been, IT sector. In fact, it is one of those sectors which was sitting at record high levels when rest of the market was still undergoing correction. Neeraj, of course, HSBC has come out with this note wherein they have made major changes, upgrading a few stocks like Infosys, downgrading some like TCS, etc. What's your take on the IT pack? Is it still better to stick with the niche names, the KPIT techs, etc. of the world, or is it time now to make a switch because the auto industry is going through a slowdown, at least in Europe?
Yeah, I think IT stocks have made a major move in the last 2-3 months, 3 to 4 months. I think the valuations which are looking very, very attractive about few months back, it's looking fine right now. It's not that attractive a valuation. So one can again be very stock specific there, though there are larger companies which like a TCS, which I think the current valuation at some discount to its historical valuation. So there, I think one can take a view from the larger IT companies. But I think the major move is, which we saw from the bottom, even Infosys saw a good move from the bottom. It saw, a couple of quarters back. So I think some major move has already happened. So from these levels, I'm not expecting too much of a move in the IT company.
Okay, so that's the take coming in as far as IT companies are concerned. But some of these hotel companies have been doing quite well, and you keep, kind of going through these announcements of some, fresh additions that they are making. Of course, Indian hotels had come out with their big bang plan of the capacity addition. There's Sami Hotels wherein they've reopened one of their properties as well. Lemon Tree has signed a new property. Chalet, of course, came out with the news a couple of days ago. Neeraj, this entire tourism theme, including the, aviation sector, is this still something that you would want to bet on?
I think because this quarter has so many weddings also lined up, and this quarter normally gets very busy for tourism also in the north. Plus, then again, Christmas, New Year, January. So that I think this is a busy quarter for most of these companies. So whether it's hotels or even aviation, I think there is definitely going to be good results coming for this quarter from these companies. So I think that will further, give a momentum to the stock prices, which have already been doing quite well.
137 rupees, where it was in COVID, 37. Yep. 2020 October. 45-50 rupees is where it was. Must have gone below 40 rupees also intraday, I don't know. And in 4 years, what an extraordinary turnaround it's been. There you go. 92 के बाद graph ही नहीं है. But I remember it falling much below 92. But nevertheless, from this chart also, it is almost like a 10x. What a comeback it's been for the sector, for the company, and for just about everybody who had written off the entire hospitality sector. Neeraj, which is the next big one now? I mean, there is no point in discussing Indian hotels now because it is already 10x from the low. Which is the next 10x coming in next 5 years?
Yeah, we're talking about the hospitality sector or
no, anything. Next 10x coming. It doesn't matter whether it is large cap or small cap, as long as it is 10x in 5 years. We'll go with it.
Yeah, it's very difficult to start an investment with 10x in mind, but of course, certain stocks which can do well. One of them which I'm looking at is Agarwal Industrial Corporation, which is into bitumen manufacturing. They're one of the largest private sector players. And the kind of capex and the kind of road which is going to come going ahead also. So they should continue doing well. They have a good infrastructure. They have their own vessels. They have their own trucks. So they have the good fleet which they've already invested so much in. So which should continue doing well. So I think if one has a couple of years of investment horizon, can get a decent return from Agarwal Industrial Corporation.
Also updates coming in from some of these life insurance counters with respect to the kind of APE growth that they've seen and what the monthly update is. LIC has degrown by about 12.4%, and that seems to have dragged the overall industry growth. Some of the private players have seen the APE grow by about 10 to 15%. Let's get in a sense, Neeraj, as to where you stand within this space and how have you read into the numbers?
I think, yeah, definitely, like you've been saying, the private sector numbers have been good as far as this space is concerned. But I haven't really seen too much of a movement happening in these stocks over the longer term period. Last 2-3 years, if you see also, you not got that kind of return you got from other sectors, the broader market. So I'm positive for someone who wants a defensive portfolio. He can get some of these private names into the portfolio, but overall, it's difficult to say that you can get exceptional returns or market outperformer returns from these companies for a little longer term period.
Point taken. In fact, on that note, we let you go, Neeraj. Thanks so much for making time and speaking with us. Well, then.
If you like this video, then like, share, and subscribe to ET Now.